Hello and a very warm welcome to all the viewers of 3.0 TV. This is Manoj Dara. So Bitcoin price rally has amazed one and all. Many analysts are betting big on its price surpassing $100,000 mark this year itself. Jeff Kendrick, head of research at Standard Chartered, is one among many to believe that the Bitcoin holds a strong potential. We are happy to connect with Mr. Kendrick. Welcome on 3.0 TV, sir.
It's my pleasure.
I mean, now, what's your opening remarks, sir, on the Bitcoin price hitting all-time high momentarily and actually corrected 10% immediately within the 10-15 minutes? What's your first opening remarks on that, sir?
Absolutely. So everything has been positive for Bitcoin over the past little while. So I first called for Bitcoin to get to 100,000 by the end of 2024 back in April of last year. That was on the back of some concerns in the banking sector. That was SVB at that time in the US. And since then, obviously, we've had a lot of positive news more recently on the ETF inflows, for example. So we've had about $7.5 billion of inflows already in the ETF space. It's fair to say this is the best kickoff for any ETFs in any asset class globally, even surpassing inflows to bond markets, etc. That were the previous all-time highs in terms of their kickoff. I think it continues. Obviously, we hit the all-time high yesterday. As well as the ETF inflows, of course, we've had a lot of other money coming in on the leverage side. So you're not yet, in terms of futures, at the most extreme open interest position where you were in 2021, but you have seen large inflows. And that explains some of that volatility around yesterday's price. So we pushed up to just print that 69,000 all-time high. And because of that, you had some shorter dated, let's call them weak hands, that have been buying towards the highs. And so when the price reversed, you saw quite a large long liquidation positions in that leveraged perpetual futures type space. Yeah, so
exactly.
ETF inflows very sticky. Some of those shorter dated ones in the futures market can be a little more volatile.
So since we're talking about long liquidations and we've seen roughly around $800 million worth of long positions being liquidated. Sir, you have said that you are thinking that the entire ecosystem will benefit with this Bitcoin's price surge, and 100,000 is something which is just an arm's length away. But do you think the uptrend in the Bitcoin prices will continue, and how far and what are the fundamental and economic factors you think may continue to support this uptrend? Because there are a lot of hurdles, as you have said, that there is something which is happening in the derivative segment. Some are expecting, the consolidation. When will this consolidation phase begin? And what's your view on that, sir?
I think the ETF flows are the #1 driver for the rest of this year, to be honest. So I predicted between 50 and $100 billion of inflows this year. To be completely honest with you, we're almost smack bang in the middle of that range when you time adjust, right? So we've been going for about 7 or 8 weeks at $7.5 billion of net inflows. After you take the grayscale selling out, it's about 120,000 new Bitcoins already in these new ETFs. So I think that flow probably continues. And that type of flow, which is pension type money out of the US, is very sticky. So the extra positive here is that money goes in and basically never leaves, at least not in any time horizon that matters, right? So what you saw yesterday were those shorter, let's say more speculative flows exiting the market. So over time, you're getting this positive mix change, and that is towards more longer term sticky money rather than speculative money coming through. That'll probably mean volatility goes lower as well. And so I think that should see us up to, as I say, 100,000 this year, 200,000 next year, remain my price targets there.
Wow, fantastic. And I mean, you mentioned about government-backed entities entering into this space, which are not allowed as of now. But what about sovereign wealth funds? If they think that they are going to come in with their Bitcoin holdings, maybe indirectly. So what will be the impact of that move, sir?
So obviously we already have some, let's call it smaller countries that have said that they're invested in Bitcoin. El Salvador, for example, gets the most headlines there. But I suspect that during the year this year, we will get a large country that has large reserves also announce that they've been buying as well. So there's been a lot of speculation about that in the last few days, possibly Middle Eastern type names, given the size of reserves there, given the potential to want to diversify away at some point from dollars. So yes, I suspect we will get something in the sovereign space this year. Fantastic. So far, it's really just rumors.
You will get something from the sovereign space. That's a big statement coming in from the Standard Chartered. But moving on, sir, when you talk about fundamentals, since we are discussing about the cryptocurrency on the upside and Bitcoin hitting all-time highs, the supply-demand dynamics. Can you explain this for us, sir? Since 900 are mined, and going forward, halving is also expected. 10,000 is the actual expectations from the market, the accumulation kind of when you say that the ETFs are buying. So how can you explain this supply-demand dynamics and what role it's going to play going forward? And what are the key factors will influence the Bitcoin price in the near term, sir? If you can just highlight that as well.
Absolutely. So there's quite a few elements to the supply-demand dynamic. The first point is to make that only about 20% of all coins change hands within a reasonable time horizon. So that's only about $200 billion out of the total current market cap of about $1 trillion. Yeah, so it's kind of like in equity land if you were to say that the free float is only 20% of outstanding equity. So there's not a lot of effective supply for ETF buyers and other buyers to get access to as sort of point number one. Point number two, and you mentioned on the halving, right now you get 900 new Bitcoins a day. After the halving, which is supposed to be on April the 19th, that will literally halve. That's the definition of the halving. So you'll have just 450 new coins each day. So far, the ETF inflows that are 120,000 Bitcoins since January the 11th have roughly tripled the number of new Bitcoins that have been coming out of the mining space. Yeah. So if you assume those flows continue, post-halving, instead of a multiple of 3, that'd be a multiple of 6 by definition. Yeah. So the supply-demand dynamics are suggesting that the supply curve is extremely inelastic, to use an economic term. And so when you get demand shifts to the right, like we've seen on ETF flows, that's why you get dramatic moves higher in price, like 20% last week, for example. Yeah. So I suspect that continues. As I mentioned, the halving should be on April the 19th. We also have in Ethereum a number of other drivers that can feed back to Bitcoin. Next week, we have a large upgrade on the 13th of March that will make transacting on layer 2s in Ethereum space much cheaper. And then I suspect on May the 23rd, the SEC will also give the green light for ETF inflows on the Ethereum side as well. So quite a lot of dates coming up, and pretty much all of those positive in my view.
So do you have a price target on Ethereum as well? Since as you are really optimistic about the Bitcoins, so have you kept any price target for the Ethereum?
So it's very likely that the relative price, which is the ratio of the Ethereum price to the Bitcoin price, will continue to trade around this 5.5 or 6% mark. So if we get to 100,000 this year in Bitcoin, that would equate to about 6,000 in Ethereum. Next year, it could be perhaps as high as 12,000 on the Ethereum side if my estimate on the Bitcoin side is accurate. Next year, we'll also likely start to see some real-world use cases come through on the Ethereum side. For the first time, most trading that happens on the Ethereum network, the first 2 industries I think that will be coming out of the real-world space, we've seen some tokenization. I suspect that continues. That's tokenized bonds, real estate, etc. And then we're also likely to get the gaming industry, i.e. the games that our kids play at home, Minecraft and those sorts of games, also migrate onto the Ethereum network. So once we get proof that it can, let's say, disrupt real-world industries, I suspect that's when Ethereum starts to take over. And perhaps that Ethereum versus Bitcoin price medium term then heads back to 7 or 8%.
Fantastic. 2 quick clarifications, sir. You mentioned about 6,000 on Ethereum. Will be this target is of 2024?
Yes, 2024.
And so the next year, 2025 year end will be 12,000?
Yes, yes, that's correct.
All right. And one more thing, you mentioned about gaming. We recently spoke to Mr. Yatsu of Animoca Brands in Dubai ABC Conclave, wherein he was really optimistic about the picture in the gaming sector, which is actually going on in Asia, driven by India. So are you really hoping that the next big growth is going to come from the gaming sector?
Absolutely. So one interesting thing about Ethereum is it'll probably take over without people really knowing, right? So other sectors that have been very hot the last 12 months or so, like AI comes to mind. But that's partly because consumers understand, or at least they can sort of feel and see what AI might do. Ethereum rather is like a back-end solution, if that makes sense, right? So it's kind of like in your phones, the iOS system underlying everyone's iPhone. So when that comes through, it'll see structural change on the likes of gaming. That should enable Web3 solutions where those that use games literally own things that they purchase in the games, which is different to games that are at the moment owned by megatech firms like Microsoft, for example, that owns Minecraft. You probably also start to see users able to change the structure of games. Yeah, so that's where the true Web3 solutions come through. And Ethereum's infrastructure and security is very likely to be the backbone of that new industry.
Fantastic. This is actually a very, very good, concept wherein the Ethereum will lead, post this approval. But sir, on the flip side, to your conviction, and as we are discussing about Bitcoin reaching 100,000, and you have also said that there is an optimism around the 2,000 levels as well next year. Can there be a flip side to your conviction and any factors that can derail the big expectations? Because there cannot be a single side up the hill. What if there can be a vertigo-induced downfall? And there we are thinking of a plan B. For example, large investors have flocked the ETFs and talking about entering into the perpetual swap contract, which you have already discussed. What are the factors you think that can play a spoilsport in this, sir?
Sure. So the risk factors, so you've mentioned the volatility via the futures contract. So I think it's fair to say this asset class remains pretty volatile given we retreated 15% off the highs yesterday. So it remains volatile. And so at some point, you could argue that pension money is less attracted to what is a very, very volatile industry, particularly if prices stop going up for a short amount of time, right? So given what happened last week, prices up 20%, yesterday's price action is not that much of a concern. In terms of broader macro fundamentals as well, although our view is that Treasury yields go mostly sideways, the Fed cut rates a couple of times this year, if that proves to be wrong, and let's say the Fed had to hike interest rates again in this cycle, and or Treasury yields backed up to that 5% that we saw last October in the 10-year space, then in a relative sense, Bitcoin in particular, which has negative carry, becomes less attractive to investors. Yeah. So if bonds become either A, more volatile, or B, bond yields push higher, in theory, at least, you could see less investors flocking to Bitcoin in terms of the ETF inflows, right? So then I'd probably be thinking about only hitting my lower end target, 50 billion in terms of inflows this year, rather than the higher end. So that's probably the main, let's call it macro driver that has, at least in theory, some chance to impact the industry.
You're concerned about the interest rate if something goes wrong in that. What's your lower end of the target?
So our view is that the Fed will cut rates 3 times this year, and that's probably going to be enough to see back in interest rates holding around 4%. You're probably in like a 380 to 430 target for most of this year in terms of 10-year yields in the US. That I think would be fine because that rates volatility story should be very, very unvolatile, and therefore you do see reach for other products like Bitcoin, for example. So it would only be if we blew out of that for any reason, i.e. inflation was much stickier than the Fed have been expecting, which obviously is a possible story, or even perhaps beyond the US election, if we saw much more fiscal spend and that saw Treasury yields higher as well. Another marginal risk there.
All right. So one last question before we let you go, sir. Sir, you predicted Bitcoin touching 100,000, and we're also talking about the possibility of touching 200,000 in the next year. We have witnessed Bitcoin price doubling within 18 days of halving. You also spoke about the halving aspect, how it will add to the demand-supply dynamics. Add to that the strong funds in the ETFs and several other perpetual products making a way to the markets. Sir, do you want to change your price target, or you still want to stick to it? Maybe we can see a 300,000 or a 400,000 on Bitcoin, because Michael Saylor is not looking to stop, sir, over here.
Absolutely. So I think it's fair to say that we might hit my 100,000 target sooner than I had previously expected. The ETF inflows have been very, very strong. I'm certainly not looking for a price doubling in the first 18 days post-halving. I think it's probably more of a grind higher. But I think we'll probably hit that 100,000 target before the end of this year. To get to 200,000, I'm thinking here more of a gradual re-rating of the industry. So something very similar happened with gold when the first gold ETF was introduced in the US in November 2004. In that case, it took about 7 years of inflows In Bitcoin, it's probably going to be 2 years, in my view, to get to some sort of normality in terms of ETF holdings. And that saw the price of gold go from roughly $400 to $2,000. So a multiple of 5 was about 4.5 times, technically. And so that in Bitcoin should get us from roughly 40,000, where we were before the ETF started, to 200,000 next year. So I see it as a normalization. Obviously, we could overshoot that target, but I think that's the medium term, longer term level, which is consistent with something like $2,000 in gold.
So you spoke about gold, sir. Recently, I mean, there were reports that Bitcoin is about to cross the silver's total market cap of $1.4 trillion. So when do you think that Bitcoin can cross the market cap of the gold? Since we're talking about 17 trillion, is there a possibility are you thinking somewhere near it?
I seriously doubt it. So if you optimize portfolios, which I have been doing recently, between gold and Bitcoin, and because Bitcoin is much more volatile than gold, right? It makes sense for a global investor base to have something like 80% gold and 20% Bitcoin in that mix. Yeah. So on your measures, if that equates to, let's say, something like $16 trillion for the gold market, to make my maths relatively straightforward, that would be similar to $4 trillion for Bitcoin. Now that's a multiple of 4 from here, which would be fantastic, but I think it's extremely unlikely, given where vol levels are, that we go anywhere near the overall market cap of gold.
All right. Thank you so much, sir, for sharing your views. You spoke really well about all the aspects. And thank you so much for speaking to 3.0 TV. It was a pleasure having you on this site, sir. Thank you so much.